thank you everyone for joining me as well. As Chris mentioned, my camera just popped up here. My name is Nolan Peterson. I'm the CEO of World Copper Limited. We are a Canadian-based junior mining company with projects in Chile, and we are also in the process of picking up an asset in Arizona called the Zonia project. Due to limited time, I won't give you the full presentation about the company. I'll focus on some high-level concepts about the demand for copper, and then I'll speak directly to the value proposition of our Escalones asset in Chile. I'll start a bit with the management team. We have an experienced management team, including myself. We also have a gentleman named Marcelo Wad, who's our executive director in Chile. He has an extensive history in Chile, 8 years as CEO of Antofagasta Minerals, one of the largest copper companies in the world. So we have myself, Marcelo, as well as other team members that have experience developing assets globally as well as in Chile, and have experience navigating the bureaucracy and the permitting landscape down there. And we are going to be building up and strengthening our team as we develop our assets. I'll talk a bit about the demand for copper, why we're in this space. This is the simplest slide that shows the merger between supply and demand. A lot of people, of course, are well aware of the commodity prices for lithium and the furor around that, and electric vehicles and electrification drive that. Copper is also starting to be recognized as very important for the future economy, but not widely known in the market yet to date. This is a projection of supply with the possibility of it coming online by the end of the decade. And this is demand just with a steady increase here. This doesn't include very rapid uptake of electric vehicles or electrification or mass transit or solar or wind power, etc. So this is projecting a 12.5 billion pound deficit per annum by the end of the decade, which has led some analysts such as Goldman Sachs to project a $7 price target per pound by 2025. We're currently trading at about $4.45 a pound US dollars. This is one of the most important facts as well. In the last decade, $50 billion was spent on exploration and development, and only 225 billion pounds of copper was discovered. That seems like a lot, but more copper was discovered in a single year, 1991, alone than the last 10 years combined. So that gives you an indication of how hard it is to find so-called world-class copper assets, put them into production and get them online, and all the while demand is steadily increasing, and it's relentlessly increasing. This here puts it very succinctly about copper's role, how you can see by the end of the decade, a projection to limit us to a 2-degree centigrade increase in temperatures globally requires an 85% increase in copper supply compared to the 2030 base supply. That puts it more in categories like lithium and cobalt, rather than elements like aluminum that you may associate copper more so with. This here shows one of the reasons for that drive in demand, and that is the uptake in renewable energies, of which copper is a major component of solar and wind power. Also, electric vehicles use 4 times as much copper than internal combustion engine vehicles. This is a fact that I don't think is widely well known. You ask the average person about electric vehicles, they think they're cleaner and greener, which they are, but they do require more copper. So we will be using more copper in the future than we are now, and the market is waking up to that fact very quickly. So I'll jump to our assets. I'll touch briefly on Chile. Of course, it's a fantastic mining jurisdiction for copper. The world's largest copper producing nation, has the world's largest reserves and resources. And so we are in a very good jurisdiction for a copper development project. We have our flagship asset, which is called Escalones. This project is in the Santiago region of Chile. So it's in a very good region for infrastructure. A lot of the components required to build a mine are very local. And even the world's largest underground copper mine, El Teniente, held by the world's largest copper company, Codelco, is 35 kilometers to the west of us. So we are very near to them, and we would leverage off of those types of relationships going forward. This project was historically drilled by the previous holders of the property, and everything that's been drilled to date is in this orange circle here you can see on the slide, 25,000 meters. Immediately to the south of that, we have another target called the Mancha Amarilla, and we have 3 other targets to the northeast, which are also copper porphyries that have the potential to be as large as what is in place right now. And keep in mind that El Teniente to the southwest a bit is on their 5th phase of expansion to the northeast in our direction. So that makes sense that we are a part of the copper belt of, that they are, and would be very well endowed with copper. Now, before I talk about the resource, I do want to give a little bit of a high level understanding of the significance and then of 2 different types of copper deposits. There's oxide heap leaching and sulfide flotation. The vast majority of the world's copper, 70%, is produced via sulfide flotation. The remainder is via oxide heap leaching. Sulfide flotation processing requires significant upfront capital investments on the orders of billions of dollars, at least $1 or $2 billion for a sizable project. This is all in US dollars. They require much higher operating costs, which leads to lower margins. They require flotation tanks and a water-based process that uses 4 times as much water than the oxide heap leaching process. They require tailings storage facilities that also require a significant initial capital. And then you place a 30% copper concentrate onto a boat and ship it across the world, usually to somewhere like China or Asia, where it is processed in a smelter, which hides the pollution. Then you ship it back and you can use the copper. Oxide heap leaching, in contrast, is a much simpler process, less expensive. The initial capital is well under $1 billion for a comparable sized asset and producing facility. You simply crush the material, place it onto a leach pad, which is sprayed with sulfuric acid, which is a byproduct, by the way, of sulfide flotation smelting processes. You consume that sulfuric acid, and then you use solvent extraction and electrowinning to produce 100% pure, clean copper, which already attracts a premium because it's so much more usable, and it is starting to attract a green premium because oxide heap leaching uses 40% less greenhouse gases per pound of copper produced than sulfide flotation operations. How does that apply? How does this relate to what we have at Escalones? We last year converted the understanding of our resource from a sulfide deposit to an oxide deposit. I won't get into the technical details of it, but basically what we ended up with was a 426 million ton deposit grading at 0.37% copper. That makes this deposit as a copper oxide deposit the largest copper oxide deposit in Chile in development at the exploration and development right now. So to be the largest anything related to copper in Chile, you know you must be fairly substantial. So just to put that in perspective, these are some mines that are held by major players today that are in production called Codelco, Glencore, Anglo American. You can see how our grade of 0.37% and the tons that we have, about 400 million tons, are right in the ballpark of these existing heap leach copper oxide operations that are producing. None of these assets would be in operations as sulfide flotation projects. They would simply be too low grade and too low tonnage. And that was the problem with Escalones before my management team came along and understood the potential and did the work required to change the understanding of the resource. This here is the clearest value proposition for World Copper and Escalones, and the one that I would like you to pay the most attention to, and if you want to follow up later, take a review of. This is a company called Marimaca, which is also a Canadian junior company based out of Vancouver with an asset in Chile that is also a copper oxide deposit. They put out a preliminary economic assessment to the Canadian standards called the PEA, also generally known in the industry as a scoping study, of 131 million tons in their mine plan. This was in September 2020, I should say. 131 million tons. You can see our available resource is over 3 times larger. Their grade is slightly higher, but our contained copper is 2.5 times greater than Marimaca. Their PEA at $3.15 per pound of copper, again, we're trading at about $4.40 per pound right now, was 757 million US dollars pre-tax. And on January 17th, they were trading at 6 times our multiple. What is the difference? We do not have a preliminary economic assessment yet. However, I started one last September and it is due now within the next 3 weeks. So we aim to have that out by mid-February. And as you can see by the numbers involved here, as you would expect, I will tell you without getting into specifics that our projected NPV should be in the range of double the size of Marimaca's, and our valuation right now, again, is 1/6 of their asset. And we are essentially at the same stage of development. So this here is a slide that shows a clear demonstration that we are the largest copper oxide project in development in Chile at the moment. Again, held up to majors, even Codelco, KGHM. There's Marimaca in the middle. World Copper on the left there is the largest. Now, we are already the largest, but we also are expecting to receive drill permits in February, which will allow us to drill in the Chilean summer, which is ongoing right now, but we'll finish that this year, February, March, and April, of the Mancha Amarilla. The Mancha Amarilla, outlined in this yellow block here, is immediately to the south of the main resource and has never been drilled historically. The previous operators ran out of money due to depressed copper prices and couldn't raise the capital required to drill it. We have the capital available. We are well financed to pursue this. We will drill this Mancha Amarilla, and we expect the potential to double this resource in size with a successful drill program. That would make this potentially 700 to 800 million tons deposit, and we would roll that into an updated economic valuation and set us up for a future development of the project. I will also remind you that in addition to the Mancha Amarilla, we still have 3 other targets to the northeast, which have had no drilling on them done to date. So there's a significant amount of copper already existing on this asset, significant amounts of copper to be discovered going forward. We have some other opportunities with the company as well, significant upside potential that leads to us being undervalued. But given the time, I would like to leave you there right now with what we have with Escalones, and I'm available for questions.
Sure. First one. So how does a company valued at 42 million Canadian dollars sit on 3 prime copper assets?
Yeah, that's a great question. So the previous holders of the property were a precious metals focused company. So if you know the copper geology, you know that copper porphyries often contain copper and gold deposits. They were, and often they are so large that you need, and the grades are so low. I should show you a slide here that shows copper porphyries. Here, you need, the grades are in the 0.4% region. You need a significant gold component to pay for the development of the copper component. Every project on this slide here is a copper porphyry, so a similar type of deposit as Escalones, but they're all sulfide flotation operations. So they have that up to $2-3 billion initial capital. Some of these here cost $4.5 billion. Escalones can be built for under $500 million, and our PEA will confirm that. So they kind of didn't see the potential in developing it as a sulfide flotation. They didn't understand that it actually had a better potential as an oxide project, focusing only on copper. Again, they were a gold company. So we came along, we understood that potential, we did the work, focusing and saying, what if we just do copper? So we picked it up very inexpensively. They thought that there would be no component. They actually maintained a 30% interest in the project, which they sold in October for 33 cents. They sold 12 million shares for 33 cents. We're currently trading at 99 cents. It just goes to show that not everybody understands what they are sitting on, and we believe we have significant runway to expand. That's how we picked up this asset. We also picked up another asset for different reasons that will take longer to explain, but that's the summation of it.
Okay. So what is the ESG, the environmental impact on all this project work?
Yeah, so we are early stages right now, so exploration doesn't have a significant environmental impact. But again, we are positioning this project as an TSX.V project. Again, lower initial capital, no tailing storage facility or pond, 40% less greenhouse gases emitted, 4 times less water used. Early stages, we're on the top of a mountain here. We have the opportunity to use technologies such as regenerative conveyor systems that will generate electricity as we move ore down from the top of the mountain to the base. So all these concepts allow us to position this project as a greener, cleaner project. 20 to 30% of the world's copper comes from oxide, so we're already cleaner than 70%. We are a young company with young management such as myself. We're in touch with the trends. Copper has a role in the electrification of the and modernization of the world's economies. So we understand that it won't be enough to just say you contribute to it by making copper. You have to do it in a greener, cleaner manner, and that's how we're setting this project up.
Okay. You mentioned, yes, someone's picked up. You mentioned on your website about having unique skills with your team. Can you be more specific on that?
Yeah, of course. So as I mentioned, you know, a lot of junior companies, if you watched a lot of presentations, very focused on exploration, very focused on exploration and geophysics, less so focused on development. Myself, I'm an engineer. I spent 15 years of my career in project development, SNC Lavalin. I've worked for clients like Newmont, Barrick, Rio Tinto, as well as some companies in Canada called New Gold and TMAC Resources, which put projects into operation, billion-dollar assets. I also picked up a CFA and MBA, so I understand the financial side of the mining industry and can merge it. So I'm a key player here, understanding what it takes to develop assets. That's how we're positioning this company to actually explore and then develop them, not just lead us down a one-track path for a sale, although that's certainly an option. We have Marcelo Awad, 8 years as Antofagasta CEO. He put 3 major projects in Chile, billion-dollar projects into production. We've got Patrick Burns. Here's our geological credential. He was the first project manager on the discovery of Escondida, which is the world's largest copper mine, produces 5% of the world's copper from a single mine. He was involved in that early in his career. We have a gentleman named Shistov Napirla, comes to us from KGHM, a major copper company. He left being the general manager of KGHM South American operations and their Frankie mine to be our general manager in Chile. He's in charge of developing and advancing the Escalones asset. So again, you can see how we are telegraphing, we are putting in place a team here that actually knows how to develop, find, and then develop and advance assets. On the financing side as well, we have a number of strengths.
Excellent, thank you very much. So one of the questions here, a short one, barriers to entry. What are the barriers to entry?
For well, obviously you have to, for a junior company, you would have to find the capital, permitting, those types of issues, community relationships. Those are the standard barriers to entry in any mining project. The other one, of course, is finding a resource, which we already have. We've got studies coming, already existing and coming. So that is often actually the biggest barrier to entry, to find something that's actually viable to advance. But then the rest is just the standard mining work which we have to go through, which is making sure the project is set up for success on the permitting and government relations and funding side.
Okay, so leading on from that, fantastic projects. Are you obviously you've got some big players interested in looking at what you're doing?
Certainly, yes. We have been in discussions with many institutions and larger players. A lot of them before we converted, or the understanding of this project from a sulfide to oxide. I have no doubt that many of them, you know, they operate on, oh, we'll review a project in a year and see where they are in the next year. They are still on the sulfide story. We're working hard to get the oxide story out there. Even as an oxide resource, we've had significant uptick in our share price, but it's still not fully understood in the market. Not everyone understands it, but everybody understands dollars and cents. That will become very clear when we put out our PEA study within the next few weeks. And then at that point, I expect the floodgates have opened. Many people will be interested in this asset with what we have and how it's kind of flown under the radar. Also, World Copper has only been publicly traded for a little bit over a year, so we don't have that typical 3 to 5 years of drilling, developing the story. People start to pay attention to it, seeing how it's developed. It's a very fresh story, and I think that we've had great success nonetheless in a short period of time, but it's only going to accelerate from here.
Okay, and then another question come through. Are you getting a lot of support from the government or any tax breaks in Chile?
Not at this time yet. We're still a junior company that is mostly focused on exploration and development. So they are not at this. We're not at the stage yet where we can just be discussing tax breaks on future operations or anything of that nature. And probably we don't want to become too high profile too early either. We'll let some of the other larger projects in Chile take the heat while we get everything ready to present and put our best foot forward. First impressions mean everything, right?
Absolutely. So what is the timeline for producing?
So for an asset like this, we would be focusing on the next few years, expanding the resource, de-risking it, and doing more engineering and development. Then we would start the permitting process. I could see this project in operations within 7 to 9 years, depending on how quickly we can move through that. And that by no means is slow in the mining industry. If many of your clients pay attention, a copper project of this scale can often take 15 years to develop, so under a decade is actually very fast. And you can see some of these assets here that I showed you that are our peers. They would have been in development for over a decade. They still maintain significant valuation in the hundreds of millions of dollars. So if we can get to that stage and advance this project, I have no doubt that we'll close the gap very quickly.
Okay. So obviously you're listed TSX, OTCQB. Is there a London listing in the pipeline?
We're exploring that, of course. We're also exploring a listing on the Frankfurt Exchange, which is relatively easy, and we'll probably have that within the next week or so, or next couple weeks. So if that's a little bit easier for some of the people in the UK to invest in, that's an option as well. And of course, we are exploring London as well in the near future.
Excellent. Okay. I think that is pretty much, I'll just double check and see if I've got any other questions for you. Any likelihood of, what is the relationship with Wealth Minerals?
So Wealth Minerals is a major shareholder of World Copper. This company started as Wealth Copper as a subsidiary, and then it was spun out publicly. Wealth Minerals will own about 25% of the company after our merger with Cardeo Resources, which is expected to close within the next week. And they are a very strong supporter of the company. They have no intention of selling until this asset and the company are valued at the proper levels.